In this video, for the fourth month in a row, Bitcoin remains within the same range, and why I continue to wait for a move. A detailed analysis of the mechanics of black swans, and why patience and risk management skills are key in this strategy, as well as why, at the moment, the probability of Bitcoin and the overall cryptos market falling remains higher than the probability of growth, and the traditional breakdown of the weekly options strategy. Hello friends, this is the Optionomics channel, and I'm your host, Roman Besedovsky. And today, as usual, we will analyze Bitcoin options and look at the current opportunities for making a profit. Take a look at what's interesting right now. First of all, open interest, if measured in the number of Ethers and Bitcoins, is currently at its highest levels. And the last time, for example, when there was a previous high in Ether, after that there was further growth from 3,800 almost to 5,000. And you can see that right now, the number of Ethers, when Ether approached 2,000, is at its highest levels if you look at the entire period starting from 2020. Usually, open interest, as you can see in the statistics, indicates a high probability of movement because it shows that there is currently a large bet on the table. That is, open interest essentially shows how many shorts and longs are open on the market at the same time. And, as usual, it's similar to an analogy with a poker table. If open interest is high, it means that players are ready to play, and there are big bets on both sides. If we look at Bitcoin at the same time, we can also see that open interest in... It turns out that for Bitcoin as well, open interest is at its highs. That is, the previous time the highs were reached was when Bitcoin was trading high, around 120 to 126,000. Then open interest surged when Bitcoin, as it turns out, was falling to around 90. And now again we see that Bitcoin, open interest in Bitcoin futures is also quite high. That's why I believe the probability of movement remains high. What else? What else is worth paying attention to? Look. It turns out that if we look at the monthly chart for Bitcoin, we can see that this is the fourth month. But it's coming to an end now. So May is coming to an end. And if we look at previous times when Bitcoin was moving sideways, basically you could say that in 2025 for 1, 2, 3, 4, 5 months, it was moving sideways. Then there was a falling month with minus 17%. After that, there was a long sideways trend in 2024, starting from March. 1, 2, 3, 4. Then actually here, you could say that in July, there was a sharp move downward, which then bounced back. And after that, there was a rather strong movement with a surge up to 49,000. So here it might seem that in principle the market wasn't moving, but in reality, if you look, the opening was at 64,000 and the minimum was 48, so actually it dropped by about 20%. And there were also periods of sideways movement in 2023. Here it was moving sideways for 1, 2, 3, 4. Well, probably you could say that this month it wasn't that strong. Here it was down by 11%, then another 3, and then it shot up. So, up by 28% in just 1 month. This one is probably the longest period. So here it stayed flat for 6 months, and now we've had 4 months go by. And you can see that Bitcoin is trading in a narrow range, roughly from 78, and here it goes down to about 66. That's about 15%, so it turns out that this period is similar to previous sideways trends. And as I already told you in the previous video, we know that many large institutional players, such as Goldman Sachs, the Harvard Fund, and many others, exited Bitcoin, and most of these Bitcoins were taken on by the company strategist, Michael Saylor's company. That is, at some point, if, or, for example, the current supply of Bitcoin is removed, then we may see, say, a sharp increase. If Michael Saylor loses, purchasing power for some time can also see a strong decline. I think there might not even be any point in going to the area there, and there are other things worth paying attention to. Look, it turns out that I was talking about the Vela site. At the moment, option prices are at their lowest levels, that is, they are at minimum values, so since 2023 they have been even lower. The lowest value was around 32% in implied volatility, meaning basically it hasn't been lower than that. And what else I wanted to say is that as option sellers keep selling more and as insurance becomes cheaper, at some point the insurance gets so cheap that selling it is no longer profitable. So what do people usually do when insurance becomes cheap? They create some kind of event to make it expensive again. That is, usually for this very reason, volatility tends to be cyclical. So, for example, sellers keep selling and selling, making money as long as the market doesn't move anywhere. But at some point, everyone stops buying insurance. What needs to be done to make people interested in buying this insurance again, and to make it cost a reasonable amount again? There needs to be some sharp movement. And I don't know if you're aware or not, but there's an interesting product on crypto exchanges called dual currency investments. And it basically sounds like buy cheaper or sell higher. And if you take a closer look at this product, which is marketed as a VIP offering for wealthy clients on crypto exchanges, what are the exchanges actually doing? With this product, they buy options from clients at prices lower than the market. In other words, if there is a strong market movement, the exchanges take money from clients through these products because on the surface, it sounds very profitable. Sell at a higher price. It seems like if you sell at a higher price, you won't lose anything. So what's the point there? For example, you have Bitcoin that you bought at $70,000 and they tell you if within 3 days it reaches $73,000 or not. If it does not, you will get some money. If it goes above $73,000, then your Bitcoins will be taken from you at $73,000 and you will still get paid something. And it seems like this offer is very generous. But in reality, over time, exchanges collect a large number of cheap options from small players, and when a price movement happens, they make very good money on it. So in fact, when there is no movement for a long time, exchanges actually lose money on these products. And since crypto exchanges, in my opinion, don't really like to work for a long time for themselves, at a loss, that's exactly why we periodically see strong movements happening. Looking at the deltas chart, we can see that there is still a certain skew towards puts. By the way, it's also interesting to see what's happening with Bitcoin. Someone has bought 80 strike calls. And this week, unlike the last, I will continue to take options in both directions, especially since they're cheap right now. And let's break down the previous trade. Last week, I decided to initially purchase nothing but put options. But then, on my channel, I wrote that I also bought some call options just in case. Why? Because in the end, Bitcoin didn't go down. President Trump came out and said that they had practically reached a peace agreement with Iran, and at that moment, Bitcoin shot up. So at that time, I bought expensive put options, well, expensive relative to that moment, at $245 each. Accordingly, I spent $2,050 on that. And then when the market jumped up, I still decided, just in case, to stay out of the way of a strong move in case it suddenly happened. I bought some cheap 81 put options at $8 each. I bought 3 of them, so my total risk for the week ended up being $2,200. So it slightly exceeded those very 2% I mentioned, and now look, it turns out that my profit chart, as they say, shows that I have, at the moment, I have a negative return. My balance has dropped below 100,000. But at the same time, I continue to stick to my strategy of buying a black swan. Why? Because a bit later I'll show you that the most important things here are patience and risk. Management, in other words, if there is even the slightest movement in option prices right now, then actually this loss that I have been enduring for so long can very easily turn into a profit. And with the current prices, it could easily yield 20 times the return, and in a good scenario, maybe even 50 times, but I think that on average, 20 is quite realistic. So, we have analyzed the previous trade. Last week, Bitcoin, if we zoom out a bit, as it actually turns out to be the case in the end. When you look at it, quite surprisingly, Bitcoin didn't really go anywhere. There was a strong candle at one point when Bitcoin shot up and down, but overall it stayed in the same place. This corridor, BT coin, spent the whole week right inside it. What do we see now in option prices? If we go ahead and open up the Bybit platform and, for example, navigate to open the position builder tool right here, we can also clearly see the following information. For instance, just this past week, I actually decided to buy some put options for $245 when Bitcoin was at $74,000. At the moment, when Bitcoin is at 73,900, it's actually even lower than it was last week. If we look, for example, at the same options for the week of June 5th, the 60/80 options, they cost $185. So, with Bitcoin currently lower, these options are 20% cheaper. It used to be, but now it's worth almost nothing, which is exactly why this week I'll be taking both sides again as usual. So if we look at the 78 CAL options, we can see that they're only $55, basically next to nothing, so take a look. So if we take a look at the current situation right now and examine this detailed data table that I am constantly and meticulously updating, we can clearly see that it consistently and regularly demonstrates exactly how often there is absolutely no movement or significant change occurring within the dataset. For example, if we wait for a strong move, say 15%, first of all, we can see that the maximum Bitcoin has moved from open to peak by 15% was only 80 weeks. Right now, it's exactly those same 80 weeks. So it has now broken the record for not moving from the open to the high. It's been 80 weeks. Before this, let's see what the previous record was. The maximum was 36 weeks, so now the record for not moving up by 15% has almost doubled. The same goes for downward movement. It was 90 weeks, but that was just recently interrupted. So now, when was that? That was up until the 7th month of 2024. There hadn't been a downward movement of 15% for 90 weeks. But what's most interesting right now is that, for example, this week I plan to buy the next position, meaning I plan for 70,000 at 78 and 70 at 78. So given that it's currently 74,000, that's... By the way, no, most likely if it goes down, I'll be buying a bit further down at 69. Because I believe that if there is a downward movement, it will be stronger than any upward movement. So the 69 options cost 115, while the 78 cost 55. So in total, such a position would cost $17, but that's if you take just one option each. I'll be taking more, but that's not important right now. So it turns out that for my 69 put option to work, I need the price to go from 74 to 69. That's $5,000. I need it to move more than $5,000. 5,000 divided by 74. So if Bitcoin drops by about 7 or 8%, this option will already be in the money for me. As for the upward movement, for the 78 options, Bitcoin needs to go up by 4,000. If we divide 4 by 74, it turns out that I only need an upward movement of just 6% for this option to be in the money as well. So I only need a 7% move for this position I'm planning to open to become profitable. Let's take a look. So if we just set 7%, which is actually very little for Bitcoin, we can see that the maximum from open to close, Bitcoin hasn't moved 7% in 16 weeks. And what we see now is that these very 16 weeks are happening right now. This is a record period when Bitcoin hasn't moved from open to close in this weekly range from Sunday to Friday for 16 weeks. The previous record was 15. Now we've broken that record by 1 week, and that's why I believe that in the current position, well, the chance that there will be at least some profit is actually quite high because we've been standing still for a long time. The open interest is currently high, and most importantly, the option is very cheap. So with such options, I believe that if any volatility appears, then basically those who buy them, including exchanges that also buy them, will benefit greatly from it. I'm actually expecting a bigger move. I believe that a movement of at least a few percent could happen, 11 to 12%. And accordingly, we see that if we're looking for an upward movement, right now we're actually in that very record-breaking streak without an upward move of 12%. And look, let's now break down why I've been tolerating losses for so long, not changing my strategy and so on. Because, for example, if that very 12% move happens now, right now the market is at 74. I've dropped from about 113,000 to 98, so that's roughly around 15%. If, for example, that same 12% upward move happens now, that would be 74 plus 12%, which is about 7,400 for 10%, and another 2% would be 11,400. So that would be 85,400. Now let's factor in a 2% risk. So right now we have $17 here, and 2% should be about $2,000. So that would be approximately... There are roughly about 12 different options available, perhaps somewhere between 12 and 13 in total. So here we see it's $2,000. If, for example, a 12% upward move happens now, then with a 12% move, I calculated it and we got 11,400, 85,000, roughly 85,400. So if such a move happens right now with my current risk, I'll be up by 86,000. And obviously if such a move happens even once in the next, I don't know, 10 weeks, then even if I lose 2% every week and there isn't even a minimal move of 8 to 9%, just one such move will cover all the losses I might incur in the meantime. If the same thing happens to the downside, then basically the situation is symmetrical. Well, here the profit will be a bit less, although I believe that if we drop, we could go even lower than 60. So, for example, if we get the same kind of Black Swan event as we had at the beginning of February, back then in just a short week we dropped, I think, by 22%. And it turns out that if we have a similar week now where we drop below 60%, then even if we fall to 59%, you can see that in the moment you could get more than 100% return on your deposit. That's why in the Black Swan strategy, the most important thing is actually patience. Patience and risk management. Risk management is necessary. Why? So you don't risk too much. That is, right now, I'm not planning to raise my risk much above 2%. Patience, obviously, is needed to sit through these long streaks, which are very uncomfortable. And in fact, every week it feels like maybe it's not even worth doing this anymore and that it will never happen. But in reality, it turns out that in almost all markets, at some point, the movement does happen. And at the moment, I've already had several losing weeks in a row. So it turns out that the account's peak was around January 30th, I think. Well, the 30th was when the trade was opened, but in fact the peak was somewhere around February 7th. So since February 7th. Now it's already the end of May, so February, March, April, and May have passed 4 months. That means I've been taking losses for 4 months. But since I'm used to this strategy, this isn't my first such streak, and I'm accustomed to waiting it out sooner or later. Movement. And accordingly, a move like the one I just showed you can easily bring in 50 to 100% returns on your deposit. That's why I calmly continue trading with this strategy. Naturally, it stands to reason that it makes sense to try, for example, to effectively compensate for and balance out the losses from this strategy by incorporating a series of additional strategic trades, for instance, by selling closer to the money options. But because vol u til u t is currently so low, any sales in the tester look extremely negative. In other words, any movement can push this sale into the red. That's exactly why right now I'm probably not even trying to make any sudden moves or sell anything extra, because I believe that volatility could spike at any moment since we're at the lows, and that's why I continue accordingly to endure losses. So as usual, let's take a look at the strategy in the backtester. Let's take it and copy it. By the way, yes, one more thing, why I think the probability of a drop is currently higher. I'm still surprised at how weakly Bitcoin and Ethereum react to good news. I mean, just look at what's still happening with the S&P index. That is the S&P index. It keeps hitting new highs, and there's just some absolutely unreal growth for the American market. That is since March 30th or 31st. As you can see, we have yet another all-time high. And if you zoom out, for example, to the weekly scale, you can see that it's been 9 weeks in a row. It's just some kind of unstoppable growth. And notice that with Bitcoin at the same time, it's all sadness, melancholy, and gloom. That is, we tried to grow a little, reached about 80, and now we're going down there. So when the market reacts so weakly to good news and positivity, if any real negative news comes in, if the S&P or Nasdaq start to fall, then I'm sure that with Bitcoin it could easily happen as well. An acceleration. And there are, for example, other indices as well. That is, if you look, for example, at some Korean index, something absolutely incredible is happening there. So if you look at the Korean index, for example, since April 2025, it has grown. It was at 2,600 and now it's at 8,500. So just imagine, the Korean stock index has grown almost 3.5 times. And compared to all this, it's clear that the cryptocurrency market is now suffering greatly from a lack of liquidity. That is, people are not ready to invest right now because they were disappointed when, in 2025, despite all the positive news that came in, there was no growth at all. That's exactly why I believe that at the moment, if any more serious negative factors appear, the chances for Bitcoin was to test those lows that were around 60 are much higher than the chances of moving upward. But why do I still keep buying calls? The reason is that these options are priced so low that if I happen to be wrong and the market trends upward, they could yield a very strong return. So if you look at the current data, the 78 strike price call option costs $55. So for example, if we just leave the call option, the cost for it is $660. If by chance there is some kind of funny move for Bitcoin, say about 8%, that is somewhere around 80. Then, with an investment of $60, and if the market goes to 80, it will yield $23,000, meaning 24 divided by 600. So that gives us a 0 10 times, meaning this option will grow 40 times. That's exactly why I don't want to give up buying calls when volatility is this cheap. Because if a move does happen, even if my forecast turns out to be wrong, at least I'll make good money on the calls. So, let's get back to our backtester. So we need to copy the data. Copying the data weekly. And now we put them into the backtester. And what do we see? So let's set up the position I was planning. This is the 69th option and a put. 69th option and a put. Just need to set the expiration date. June 5th. June 5th, 69th option and a put. Adding it. And then we have the 78th set of available options, which will cost a total of approximately and we can observe the following results if we conduct a thorough test of the investment portfolio. Let's adjust the parameters accordingly so that we have exactly 12 units of each asset class respectively. The total P&L chart, but with Q-Mish-Un it comes out to 2,295. I still want to stay within a 2% risk, so I'll do 11 of each instead. Because the backtest shows results without Q-Mish-Un, and it doesn't want to show with Q-Mish-Un, and with the draconian commissions, even at 11 it's 2,200, so maybe a bit less, probably 10 each. Well, now it's 2008, I guess. I like precision, so I'll set it to 10.3. So to keep it strictly under $2,000, yeah, that's right. So it's exactly 1,969. And currently, looking at the balance in the account we have right now, $98. Let's run the test. Here you can see that with the current targets, well, of course, it looks pretty ridiculous. The chart looks really great. With each week when there's no movement, the chart looks better and better. Well, as I said, when the sellers of insurance make the insurance cheaper and cheaper at some point, they usually try to create some kind of event so that they can sell options at a higher price again, because selling options is mainly done by institutional players. That is, buying options is usually done only by those who, for example, have large crypto portfolios. To hedge, mainly professionals sell options, and so from this position, I'm planning to go into the next week. Well, let's see what happens next Sunday. So, at the moment, it turns out that everyone is expecting Trump and Iran to sign a 60-day agreement. Trump assures that this agreement will go through. Iran, in turn, is supposedly ready to give up its nuclear bomb, its nuclear program. And interestingly, Trump claims one thing, while Iran accordingly claims something completely different. And precisely because of this, I believe there is a high probability that they will not reach an agreement. And if they don't come to an agreement, then I think this current movement of Bitcoin that we're seeing could really accelerate downward. Of course, if suddenly everything turns out super well over there, it might even jump up to around 80 to 80,000. Well, that would also be great for my position. So friends, this is the position I'm taking into this week. I understand that many of you watching me are thinking, how much longer can we wait and lose? Based on my experience, this isn't my first time catching a deal like this. That's why I keep doing what I do. And let me remind you that what I say is not individual investment advice, and all trades you make are at your own risk. And if you suddenly want to follow along, the only thing I recommend is not to risk more than 3 to 4% of your capital, although I personally don't go above 2%. Thank you friends for watching this video to the end. I would appreciate it if you support me with a subscription, a like, or a comment. And let me remind you that you can ask any questions about options in the comments to this video. Or alternatively, you can subscribe to my channel, the link is in the description below, where I go into a bit more detail. I describe my strategy there. See you in the next video. This was Roman Besedovsky. Bye.